Good morning from Los Angeles. It's Alyssa Corum and Ken Shreve here with your market update. On today's show, we're taking a look at McDonald's, Veeva Systems, Yeti, as well as Workday, which is issuing its quarterly report after the close. So let's turn our attention to the major indexes. An update for you there first. We have the NASDAQ down about 0.4%, while the S&P 500 is down about 0.25%, and the Dow is also logging a slight loss as well, down about 0.1% here. So, after the bullish session that we saw yesterday, could we be potentially repeating a bit of near history here today?
Well, we had a nice follow-through day for the NASDAQ yesterday, up 3% and higher volume. It was definitely a good sign of strength after Fed Chairman Jerome Powell kind of signaled that interest rates are pretty much near neutral. So the stock market liked the sound of those dovish comments. Would have been nice to see some follow-through, additional follow-through today, but we're down moderately. It looks like NASDAQ volume is tracking lower in the early going than what we saw Wednesday. So hopefully we'll be able to firm up here, and it'll be a constructive session.
That's right, and it's still early.
Yeah.
So.
And we have the Fed minutes released today at 2 p.m. Eastern, so it's hard to think that they're going to have anything earth-shattering in the minutes, especially what we heard from Powell yesterday.
Sure. Well, we will definitely be keeping track of the market for you, and you can get all the latest updates at investors.com throughout the day, our Stock Market Today column, and after the close of the big picture. All right, so let's take a look at some individual names, starting off with McDonald's here. We have that stock up nicely today on an analyst report. Morgan Stanley upgrading McDonald's to overweight with a price target of $210. The stock currently trading around that 190 mark. So McDonald's has been a nice performer lately.
Yeah, I mean, it's kind of a bit of an anomaly. It's a stock hitting new highs. A lot of growth stocks under quite a bit of pressure in recent weeks, but McDonald's has been a great performer on leaderboard at investors.com. The initial breakout here was back in October when it broke out over 172. It then proceeded to hit new all-time highs, and a nice gap up today for the stock after Morgan Stanley comes out with positive comments. So this is a company that seems to be firing on all cylinders, and nice all-time high for McDonald's today.
All right, and pivoting our attention to a stock moving on earnings. Veeva Systems is reversing lower after its quarterly report that showed earnings growth of 80% and sales growth of 27%. That was acceleration on both the top and bottom lines and beating expectations. Its guidance was also bullish here as well. So what could be causing the reversal today?
Well, I mean, this has been a mainstay in the IBD 50. It's been a mainstay in a lot of our growth screens for many, many months because of top fundamentals and good relative price strength. And, the numbers were outstanding. Earnings beat, sales beat, raised guidance. This has been a long-time fundamental superstar medical software stock. They cater to life sciences firms. Big pharma basically help companies get drugs to market faster with their software. It was a good earnings report. The pattern headed into earnings was a little bit flawed. I mean, it had the look of a double bottom, but the middle part of the W was kind of bumping up against the 50-day moving average. It got resistance there, and then it tried to break out over the 100 level today, and it has got turned around pretty quickly.
All right. Well, we'll definitely be keeping an eye on the stock that you mentioned showed up in a lot of our growth screens.
Yep.
And let's take a look at a recent IPO, Yeti Holdings. We're seeing some wild action for Yeti stock today after its first quarterly report as a public company. Now, not too long ago, Yeti broke out of an IPO base, and again, wild action on this quarterly report that showed earnings up 85% and sales up 7%. So if we take a look at the chart and just show what we've seen for Yeti today.
Yeah, listen, I mean, this is just not obviously a pretty poor performance so far for Yeti. It crossed the $20 level with conviction. You did have a recent breakout here from an IPO base, but very volatile stock, so it's not uncommon to see price action like this. Earnings report was pretty good. I think investors might be focusing on a decline in cooler sales, although Yeti said that could be an anomaly because of the year ago performance. But this is a stock that coolers are very, very expensive, and it was a kind of an inauspicious debut for Yeti when it came public. It was supposed to price between 19 and 21. It ended up pricing at 18 and then closed at 17 on its first day of trading. So kind of an inauspicious debut and a rough session so far for the stock.
That's right, and that breakout from the IPO base, that buy point, was below the IPO price of 18.
Yeah, it was. Looked like initially a pretty solid breakout over 17.55, and the breakout looked really good early in today's session. But what we would call a spectacular reversal in the stock so far today.
That's right. Well, let's see what a workday action will hold for us after it reports after the close. So another software stock here, building a base, heading into its earnings report. The estimate is for earnings of 15 cents versus 24 cents a year ago, though. And we do have sales growth expected to hit some 30%, which would be acceleration of top-line growth.
Yeah, I mean, this is a high-quality enterprise software name. We'll see if Workday can follow the same path that Salesforce.com did yesterday. Pretty good numbers from Salesforce. Workday's most recent consolidation has been a bit choppy, some volatile price action, but the stock is up near highs, so the street is probably expecting pretty good numbers. We'll see if it can fuel a breakout for the stock Friday. So they report after the close, and we'll see what the numbers look like.
That's right. Now, what buy point are we looking at here? Would it be above that left side high of 157.22?
It's kind of a shaky-looking base at this point, so I would say the conventional entry would just be 10 cents above the high of the left side there, so 157.22. You could call the 146.88, that recent high there that it's trying to pop over in recent days, an aggressive entry, but we'll see if numbers are good, we could get a gap up out of this consolidation, and we'll see what it looks like tomorrow.
That's right. Well, we will have those results for you after the close at investors.com, so make sure you are checking in throughout the day and after the close for all the latest market news and analysis. You can also check out our content across social media, from Facebook to Instagram to YouTube and Twitter. Thanks for joining us, everyone, and we'll see you back here tomorrow.